I request all the
Over
delegates
the
and
last
members.
7 decades, the Institute of Chartered Accountants of India.
I request all the delegates and members to please start assembling in the Orchid Hall at the ground floor, which is about to begin our first technical session on recent changes in corporate, economic, and other commercial laws in another few minutes.
Over the last 7 decades, the Institute of Chartered Accountants of India has emerged as a proactive, transparent, and robust regulator. ICAI is regulatory body of the financial audit and accountancy profession in India, issuing standards on accounting, audit, ethics, and rebuild guidance to ensure quality services, augmented and enhance the competence of peer and financial reporting review boards. Embracing technology to augment competence and capacity of members and firms to improve quality. Almost 1 lakh firms spread across India are engaged in audit, assurance, taxation, valuation, due diligence, and business advisory, etc., promoting CA firms as export of CA services by working to establish presence in more than 77 cities globally. CA firms are registered with ICAI and have unique FRN. Recognized, impaneled by CAG, RBI, SEBI, and other regulatory bodies. Regulated by peer review mechanism and code of ethics. Benchmarked code of ethics with IESBA to improve integrity, objectivity, competence, and professionalism. Building reporting framework for the future by developing forensic accounting and investigation standards, FAIS, and AQMM model for the new age. The Institute of Chartered Accountants of India has been consistently striving to setting up benchmarks in delivering stringent action against erring professionals through its well-defined disciplinary mechanism. FRRB promotes investor confidence by suo motu reviewing financial statement of public listed entities, examines compliance with reporting requirements of applicable statutes, accounting standards and standards on auditing to ensure good governance and protect public interest. PRB has also emerged as a transparent quality control process of ICAI in order to strengthen public confidence on auditors. Visionary and accountable taxation audit quality review has been put into place. The audit quality confidence building measures of ICAI have gone a long way in boosting Indian audit firms' global standing. Aligned audit quality framework on lines of IAASB. ICAI, through its various constituents, continuously supporting reforms in public finance accounting and management. The ICAI has been at the forefront in upholding public trust and has provided a strong foundation to growth of Indian economy.
about to start with the first technical session on recent changes in corporate economic and other commercial laws.
Over the last 7 decades, the Institute of Chartered Accountants of India has emerged as a proactive, transparent and robust regulator. ICAI is regulatory body of the financial audit and accountancy profession in India, issuing standards on accounting, audit, ethics and rebuild guidance to ensure quality services, augmented and enhance the competence of peer and financial reporting review boards. Embracing technology to augment competence and capacity of members and firms to improve quality. Almost 1 lakh firms spread across India are engaged in audit, assurance, taxation, valuation, due diligence and business advisory etc. Promoting CA firms as export of CA services by working to establish presence in more than 77 cities globally. CA firms are registered with ICAI and have unique FRN. Recognized, impaneled by CAG, RBI, SEBI and other regulatory bodies. Regulated by peer review mechanism and code of ethics. Benchmarked code of ethics with IESBA to improve integrity, objectivity, competence and professionalism. Building reporting framework for the future by developing forensic accounting and investigation standards, FAIS and AQMM model for the new age. The Institute of Chartered Accountants of India has been consistently striving to setting up benchmarks in delivering stringent action against erring professionals through its well-defined disciplinary mechanism. FRRB promotes investor confidence by suo motu reviewing financial statement of public listed entities, examines compliance with reporting requirements of applicable statutes, accounting standards and standards on auditing to ensure good governance and protect public interest. PRB has also emerged as a transparent quality control process of ICAI in order to strengthen public confidence on auditors. Visionary and accountable taxation audit quality review has been put into place. The audit quality confidence building measures of ICAI have gone a long way in boosting Indian audit firms' global standing. Aligned audit quality framework on lines of IAASB. ICAI, through its various constituents, continuously supporting reforms in public finance accounting and management. The ICAI has been at the forefront in upholding public trust and has provided a strong foundation to growth of Indian economy.
Well, a very good morning to all and a very hearty welcome to all the members, delegates and dignitaries present here with us. On behalf of the entire ICI fraternity, I welcome you all to the 21st World Congress of Accountants, which is indeed an historic moment as for the first time in 118 years, ICI is delighted to host the 21st World Congress of Accountants here in Mumbai, India. Celebrating ideas for future, the World Congress this time would dwell upon the theme, building trust, enabling sustainability, keeping in mind the important role accountancy profession is playing as the protector of public interest. And today right here, as we've all assembled for our first technical session on recent changes in corporate, economic and commercial laws, I would now be inviting our panelists on stage. So a great round of applause, please, for CA Dr. Rajkumar S. Adukia, who's the chairman of the Committee on Economic, Commercial Laws and Economic Advisory. Next, I invite on stage CA Sripriya Kumar, Chairperson, Corporate Laws and Corporate Governance Committee. A great round of applause, please. I now invite on stage CA Prakash Sharma, Chairman of the Banking, Financial Services and Insurance Committee. I now invite CA Raj Chugh, Vice Chairman of the Committee on Economic, Commercial Laws and Economic Advisory. Next, I invite CA Priti Savla, Vice Chairperson of the Corporate Laws and Corporate Governance Committee. A great round of applause, please. Now, without wasting any further moment, I would now be inviting CA Dr. Rajkumar S. Adukia ji to please deliver his address.
Good morning, friends. Welcome to the fourth day of our learning. And I'll be sharing my views on few changes which have taken recently in economic, commercial, and business laws. Laws or law is not defined in any legislation. All experts says it is easy to describe but difficult to define. But they have a purpose, and I made an acronym RODS, RODS. So one is to protect the right of individuals and right of artificial individuals, corporates, and living individuals, maintaining the order in a society. They have a purpose of resolving disputes and differences and having standardization in society, so there is a uniformity. Laws has a long history in the world, and we see Babylon, the first city of civilization, in many aspects, insurance. So here also, Hammurabi, he made a first code in 2285 BC. India also has a very, very great heritage. When we had Lord Thomas Babington Macaulay, who started the IPC, the celebrated comprehensive code, Indian Penal Code 1860. And then over last 30 years, especially in last 10 years, a lot of reforms has been done. The numbers are being reduced. Now they are 910. In democracy, there are more number of laws compared to anarchy. And in smaller countries, the number of legislations are very less. In smaller states also, we have a state law federal system. And we have a very robust system, 25 high courts, 672 districts. There are tribunals which are quasi-judicial. And recently, the Supreme Court took a decision that Constitution bench, there will be live streaming of the proceedings. So bringing transparency. Since 1990, there is a digitalization of the whole process, filing of the appeal, the responses, order. Almost all courts have been digitalized. 24th March 2020, which came in our lifetime, I thank Almighty, it should be celebrated. It's a day of declaration of lockdown. And that day taught us what is the technology. After 1 or 2 days, we were wondering what to do. And then we realized we can connect the whole world, 193 countries, and the webinars. Now, major reforms, I'll take up few laws few legislations have the word code, C-O-D-E, like we have Indian Penal Code, Code of Civil Procedure, Code of Criminal Procedure, Land Revenue Code. So whole insolvency laws, insolvency for partnership firm, corporates, individuals, was codified, and a remarkable legislation which came, through the parliament, and a very practical code, 255 sections, repealing 11 laws. And we had NCLT, NCLAT, and Supreme Court in a hierarchy, and for individuals and partnership, Debt Recovery Tribunal, DRAT, which is yet to take place, cross-border insolvency. And there are continuous innovations, for home buyers, they were made financial creditors. There's a pre-packaged insolvency process initiated. In lockdown, the limit of 1 lakh raised to 1 crore. Labor laws is another, we have Workmen's Compensation Act 1923 and very old legislations. There are 40 old laws which are converted into 4 codes. So we have wages code, code on social security, code on occupational safety, health, and industrial relations. So this is also a very difficult area where the trade unions have an interest, employers have an interest, and employees have an interest. And ILO, International Labour Organization, which came in existence in 1919, this is again a very, very path-breaking step which has been taken in India. When I was, for this session doing a research of the whole world, the number of laws, evolutions, and I find India one of the fast emerging center for ADR. Various laws. In data protection, we were the first few who, as soon as the UNICITRAL, United Nations Conference on International Trade Law, they made a law for e-commerce, electronic commerce. India immediately came out. When European Union made GDPR, we also amended our legislation, Section 43A. And sometimes we forget that GDPR also is in India from 2011 by separate rule. And last week only, we have a new digital data protection bill 2022. We are so progressive. We had a bill introduced in 2019, December, personal data protection. Then there was a non-personal data protection. Then there was a revised bill. And then the Ministry of Information Technology felt that we need to further revamp. And there is a penalty as high as 250 crore for violation of data privacy, both personal and non-personal. FEMA is one law, international trade, ease of doing business. We used to have a number 149 out of 193 countries. And I'm sure maybe in another 3 years, we'll be at number 1. Nowadays, New Zealand, Singapore, these are the countries who are on the first 5 in EOD. And if we look at our laws, like on 22nd August 2022, there was a comprehensive amendment in Overseas Direct Investment, ODI. We have an International Financial Service Center, we have a GIFT City, we have a second version of SEZ coming up. The unique features of India is, there is a comprehensive stakeholder intervention, consensus, and their views are taken. This is the ease of doing business ranking which I just mentioned. It was 63 And if you are seeing the number from 2015 coming down, it will further come down. And if we see the areas of business regulation, deals with the starting of the business, construction permits, getting electricity, minority investors, paying taxes. Companies Act 2013 itself, I think my other colleague will be dealing with that, but lot of changes. Another area is, last 2 months we are seeing many bills coming up. We have a competition amendment bill. We have a Indian Telecommunication Bill 2022, repealing, 150-year-old Indian Telegraph Act and wireless communications. So in competition law, we have prohibition of anti-competitive agreements, prevention of abuse of dominance. ADR also, we will be a leader because we have a mediation bill. Very few countries have a mediation legislation. So mediation bill 2021, we have a strong arbitral and mediation institutions. And we have a good number of regulators in our country, 21 plus regulators. They are industry-specific regulators. So I am thrilled to see the various developments which are taking place, and economic, commercial and business laws are the heart of the laws. Out of 900 laws, 600 laws are in that area. And in my view, chartered accountant who learns from the day of articleship, the most difficult legislation, income tax, comma, full stop, inclusive definition, exclusive definition, they are the best interpreter. We need not wear a black coat to be a law advisor, to be an interpreter. I would request each participant who are in this hall, economic and business laws is a monopoly area for chartered accountants. And it is an area which gives a big money, compared to those who wears black coat. To give one example, and I will end my session. Say, for example, conveyance deed. Now, conveyance deed under Section 53A of the Transfer of Property Act, if there is a possession, then under income tax, it is considered as a transfer of property, there is a capital gain. But if chartered accountant will draft a conveyance deed, they will take care that we do not attract Section 53A, Joint Development Agreement. So please seize this area, and I am chairing Economic and Commercial Law Committee in the ICAI. We want to mentor each one of you. So please write to us with your passion, and we will work on that. I thank organizers for giving me this opportunity. Thank you very much.
Thank you so much, sir, for your valuable insights. Moving forward, I would now be requesting CA Sripriya Kumar, Chairperson of the Corporate Laws and Corporate Governance Committee, to please address the audience. A great round of applause, please.
Shri Rajkumar Adukia ji, Senior in the Council, my colleagues, Prakash Sharma ji, Raj Chugh ji, and Priti Savla, who's also my Vice Chairperson in our Corporate Laws and Women Members Committee, and to the very, very eminent dignitaries of the dais, Chartered Accountants, here's a very, very hearty good morning to all of you. I'm truly honored, privileged, and delighted to be in the Central Council of the ICAI at this very great moment in Indian history where we march towards a $5 billion economy, and I'm equally delighted and privileged to be here today. So this was a session on corporate laws, and I actually spent quite a bit of time trying to decide what to speak on, simply because there was just so much to speak about. So at one point I even thought whether I should just leave all this out and speak about nuggets from Indian mythology and history and how it links to corporate governance. Be that as it may, I finally decided to speak on a topic, on an act that's transformational, path-breaking, drastic, and dramatic in the context of India as she stands today. And that, ladies and gentlemen, is the Insolvency and Bankruptcy Code 2016. I'm just going to talk about it for 10 minutes, which is my allotted time, primarily to sort of open our eyes to a very large piece of legislation which is going to kind of impact all our lives and, more importantly, our professional lives. I see this as a huge area of practice, and truly, if you want to be a partner in nation building, I think this is the go-to law where one has to practice. And I speak on this both out of experience of having been part of the committee that drafted the CIRP regulations to the code, as well as a practitioner now and working closely with our own IPA. So what's primarily the Insolvency Code? Let's go back to the executive summary of the code, of the BLRC report. It's a very, very important report, Bankruptcy Laws Reforms Committee report. The executive summary, first paragraph says this. It says, a limited liability company is a contract between equity and debt. When debt obligations are met, the equity owners continue to run the company and the lenders have no say. But when a default occurs, the control is transferred to the creditors and the equity owners have no say. So, ladies and gentlemen, welcome to a new ethos of debt resolution in this country, where control is transferred from a debtor in possession model to a creditor in control model. And this executive summary opening paragraph just completely describes what this code is all about. Point number 2 that I'd like to make is, what was the existing Indian landscape? The existing Indian landscape was, you could go to DRT. A banker could go to a DRT to enforce a debt. You had the unfettered right of a lender, which came with SARFAESI. If it was an individual, you would go to the Provincial Towns Act, the Presidency Towns Act to call upon insolvency of an individual. You could be a creditor in a company applying for winding up of the company. There was voluntary liquidation, which is for only solvent enterprises. And then you had these out-of-court mechanisms like CDR, SDR, S4A. An individual creditor can go file a civil suit. So in India, you had multiple laws and multiple forums governing insolvency. A second most important thing is, a lot of these forums were largely sort of operational only for financial creditors, which is the lenders. So for an operational creditor, you had very little recourse. You either go to arbitration or you go to a civil court and try to get some money. And in India, unfortunately, most of our recovery mechanisms started after things became NPA. So world over, there are very powerful tests of insolvency. And today, what do you mean by insolvency? It's a simple state. It's a state where one's assets are not equal, are not enough to pay one's liability. And incidentally, for an act that's called the IBC, the term insolvency is not defined. This court said, look, we can't wait until things age and became NPA. Try and get the debt at the default stage. And that's the second big transformation that IBC came with. It came with a very powerful cessation of payment test to invoke insolvency. I'm sure most of you know about this code, but for the uninitiated, let me just describe the process for you. So let's say I'm a banker, I have a default, I can approach NCLT. I'm an operational creditor, I have a default above a certain value, I approach NCLT. I'm a home buyer, a group of us can approach NCLT. NCLT looks at the petition and says, okay, we'll admit you into a corporate insolvency resolution process. What does this do? See, previously, if you go to DRT, let's say, it was between, let's say, Indian Bank and the borrower. It was between State Bank and the borrower. Whereas in an insolvency resolution process, it's called a proceeding in rem. It's a collective process. It's a collective process where the resolution professional calls for claims, tries to get a resolution plan, and tries to settle the debts of the company and tries to revive the company. So in that situation, the fundamental objective of IBC is to cure incipient sickness. Now, many of us may ask, Priya, if the fundamental objective is to cure incipient sickness, then we've had 5 years of the law. Why do we have a problem? That's primarily because most of the cases that went to IBC are those which were actually virtually dormant enterprises, already, the ones which were already on ventilator. So how much can a law do? So today the government is working to ensure that we catch an insolvency at its incipient sickness stage. Again, somebody might ask, so what's this different? How different is this from BIFR, etc., etc.? For the first time in India, we seem to have a very aggressive time-bound legislation. Admittedly, again, you can ask me a question, why are things not moving in 180 days? It's a very new law. It's only 5 years old, and the tribunals need to build more capacity, the professions need to build more capacity. Now, in terms of the statistics, 5,800 cases went into the CIRP process in the country, of which 1,800 have gone to liquidation, 500 plus had resolution plans which came in and the company was back on its track, 840 went into appeal or settlement, and 740 cases were withdrawn. Admittedly, the country and the government have a very long way to go in the context of this code, but there are several positive developments. So, for example, for the first time, after the MSMED, the specific part on recovery of dues and the reporting, I saw a very path-breaking legislation coming here. The government today has created a new part a new set of sections in the insolvency code, which is called as the pre-packaged insolvency resolution process for MSMEs. The government responded very quickly to the COVID situation and the alarming effect it had on MSMEs. So they came up with a pre-packaged insolvency, something that all of us in this audience must explore for the benefit of MSMEs and the benefit of this country. And I'm told the government is actually coming forward to look at more relaxations. What does this pre-pack for an MSME do? An MSME who's undergoing a default situation can actually go to the court and present a plan to come out of his financial stress. Which court does he go to? He goes to NCLT. Who has to approve it? His lenders have to approve it. So they come with a simple base plan, and if things go fine, then the MSME is back on their track. So this is just one illustration of how this code, I think, is going to penetrate very deep and very importantly address MSMEs who contribute to a very, very large value of transaction throughput in this country. So this is broadly on IBC, and I think I see this personally, much as we have other challenges that are surrounding the IBC in terms of how the process could be gamed or the capacity building of the profession, etc. I think the regulators are doing an exemplary job of trying to make this code better. And what's in it for the accountant fraternity? We are at the WCOA after all. I think for us, it means 2-3 things. One, you'd actually be able to contribute to the nation's betterment of a debt situation. Today, I don't know how many of us are aware, there's 7 trillion debt that sits in the DRTs today. And that's the kind of volume of money and assets that need to come back to the country. The second is, one might think, okay, so what's the joy in liquidation? I had mentioned that 1,800 entities have gone to liquidation. IBBI chairman had said this very neatly. He said, see, even when I put an entity to liquidation and I sell the assets, I am bringing back productive assets back to the country. Again, I think I see an exemplarily large role for chartered accountants especially to act as insolvency professionals or liquidators. Now, in addition to the MSME, I find 2 other very interesting concepts which are emerging. Until the Companies Act came up with a restriction on number of layers of companies, restrictions on related party transactions in 188, restrictions on section 185 loans to directors. India was a country where you could create any number of companies, take loans from banks and move it to other entities. I think with the advent of the insolvency code, the code is also exploring group insolvency, where all entities in a group, so I had taken 200 crores debt from a bank and I gave it to 10 sister entities which are not really connected even by directors, but we just share common control. The government is now trying to come up with some kind of a framework for group insolvency. The other large issue that is being very effectively handled today is cross-border insolvency. What happens if I have a foreign creditor who has an interest in India? How do I handle it if I have an Indian resolution professional who has assets abroad? So these are the newer aspects of this law which are emerging. And just as Adukia ji had mentioned, I think this is a huge potential area for chartered accountants. But beyond all this, what do I see as a seminal change that the IBC has brought about? The IBC has a huge body of something called as avoidance transactions. Whereas a resolution professional, one is supposed to go back to look at the financials, the operations of the company, and see if there are any avoidable transactions. For most of us who read CA Final long back, the same things were there in the Companies Act as well. So you had preferential transactions, undervalued transactions, extortionate transactions, fraudulent transactions. I think previously what used to happen is an account becomes NPA. It would be called a suit filed account and it just goes into some back of beyond vault because the bank just gives up hope or does some litigation. But today, when enterprises fail, for whatever reason, business failure, financial failure, corporate governance issues, etc., a lot of these financials are getting highlighted. People are going back to the financials to see why diversions happened. Those RBI master circulars on frauds, some 42 or 45 red flags that people used to remember at the back of their minds, today all that is coming to the fore. This puts a larger emphasis and a larger responsibility on preparers of financial statements, of managements of entities, to demonstrate much higher levels of corporate governance than what normally is practiced. This also puts a little bit of additional pressure on the audit fraternity. The IBC comes with its own expectation. Today, when a regulator, let's say a court, looks at a financial statement, they also look at the audited statement and says, oh, there's a huge diversion. Is it qualified in the financials? How is it impacted? So I think one of the larger transformations, two transformations that this code will make is, number one, it will significantly improve the governance standards in this country, which I think ought to improve in certain sectors. The second interesting, important thing, this was mentioned by a former chairperson of the Indian Banks Association. So he was actually mentioning and saying, Priya, what is the biggest change in this code? One small anecdote, I don't know how many of you have heard this. They often say, if you owe the bank 1 crore, you have to be worried. But if you owe the bank 100 crores, the bank has to be worried. And so it's in that sense that he actually mentioned, he says, Priya, and he himself was the managing director of a very large bank. He said, closer to March 31st, the borrower would come. He'd put his paper on the table and say, if you don't restructure this account, your account will become NPA. And he says, he looks at me, the managing director, and says, my account will become NPA. It's actually his account. But he says, today I see fear in a promoter's eye. What is the fear? The fear that he will lose control. Something that never existed in India in the debtor in possession regime. And ladies and gentlemen, I think this is a huge opportunity for all of us to be part of this IBC movement, which will also spawn a huge amount of mergers and acquisitions, especially in the MSME, small segment space, the release of productive assets to the economy. And the ICAI is doing quite a bit of initiatives in this front. We have a CIBC committee, Committee on Insolvency and Bankruptcy Code, of which I'm the vice chairperson and Mr. Durgesh Kabra is the chairperson. Additionally, ICAI has set up an IPA, that's called as the Indian Institute of Insolvency Professionals of ICAI. We work very, very closely as a subordinate regulatory body for the IP profession. And we're constantly engaging with IBBI to make this landscape better. And if any of you have views, suggestions in this regard, we'll be very, very happy to take it for the betterment of this country. Jai Hind, and thank you very, very much for this opportunity once again.
Thank you so much, ma'am, for such an informative address. I would now be inviting CA Prakash Sharma, Chairman of the Banking, Financial Services and Insurance Committee, to please deliver his address.
Good morning, friends. We all persons sitting this side are Central Council members, and we go here and there in all different kind of seminar, conferences, workshops. And in this 10 minutes, we all individually trying to share our views regarding this particular very relevant, important topic, which is especially for we professionals, it's very, very important. Friends, it's correct to say that law is nothing but codified common sense. So a person having strong common sense has a potential to become profound liar. After high school, generally students are confused in which segment we should go. Law is a topic, a subject, generally that student goes who doesn't like arts, commerce, science. Yes, I know, friends. What are you thinking? I'm not holding a wrong brief. I'm conscious that I'm speaking to a gathering of chartered accountants, certified public accountants, and other premier accountants, and not to the lawyers. Nevertheless, the theme of corporate economic and commercial law makes me to emphasize that chartered accountants are better equipped to deal with common commercial laws as compared to lawyers. That my previous speaker, Rajkumar was also sharing his views. Nobody can beat the common sense of chartered accountants in commercial laws. In other words, the business prudence of chartered accountants is impeccable. Today, on account of very fast pace of growth of economy and business, the commercial circumstances are changing very fast, leading to frequent changes in economic and commercial laws. India is leading example of this. I recall the 10-year-old suggestion of Justice B.N. Krishnan Commission on Economic Laws, which advised that all economic laws should have a sunset clause of 10 years, and these laws should completely change after every 10 years. In the limited time, although some of the laws my predecessor have shared with you, I would like to share what are the most important laws which has taken place in last few years. That is insolvency, on which my colleague Sripriya has shared with you. Direct taxation, GST, that is indirect taxation. Another competition law. Women Harassment Act. Intellectual Property Act. Law related to information technology. Social responsibility and sustainability, labor laws, startups. These are few new areas which has taken place in our profession. Indian Insolvency and Bankruptcy Code is one of the greatest business law reforms in India. So we still have this law applicable only to corporates and not to the partnership firms and individuals. Just imagine the day government will cover partnership firms and individuals, what will be the situation? In October 2019, I had gotten opportunity to attend one conference on insolvency in Sydney. When we were attending that conference, we came to know that around 10 senior officials from Sydney are supposed to come in India, and they were supposed to give to training to government officials for partnership and individual laws relating to insolvency. But due to COVID, it could not take place. But that is the advanced stage of legislative process and would soon apply to them. So the Indian law is still immature. I must appreciate that Indian legislature and Modi government is very responsive to economic situation. And we find that after new economic situation arises, the government immediately responds to the same through legislative amendments. Till before Modi government, things never used to take place so fast. But in present circumstances, government is very open. On the lines of Western countries, now our IBC laws accommodate very liberal approach of corporate insolvency resolution process with more liberty to committee of creditors, which Sripriya ji shared with you, and insolvency resolution professionals. Recently, RBI has permitted ARCs to participate and submit the resolution plans. So RBI has also defined a detailed code of conduct of such ARCs. Yet the liberal approach is helping clean up of economic garbages. So I can say that though the Indian economy is not that matured as economy of developed countries, and still in its teenage, if not inefficiency, yet its law have become young adults. As I am sharing with you that when we were attending our conference on this insolvency, they were sharing with us that Insolvency Act is 100 years old in Australia. In our country, it is just 5-6 years old. Secondly, the Indian taxation laws, both GST and direct taxes. In my view, India has presented the world the best model of GST law in a federal structure of government. Nowhere in the world you would find such GST law. Even you would not bring unified GST law. Country like USA, they could not unified GST law in that country. Just recently, I was in USA, and it was very surprised. If I was going to purchase a mobile in New York, it was costlier. And if I was supposed to go in New Jersey and purchase from there, due to tax difference, mobile was cheaper in New Jersey. But in our country now, the way it has been presented is really remarkable. Friends, in GST, wherever any country has tried to oppose, tried to implement it, they all failed. But due to our government's policies, and even you see how GST is working, the main body where all states representatives are there, and in different states we are having different political parties representatives. Even then, we are having fantastic model. They don't take cognizance of changes in economic laws. Even if we see that any decision has come against the laws which government has made, that GST Council takes place, immediately take the decisions and come out with different legislations immediately. So frequently, government is dealing in these GST laws, and you can see from last so many months, the way GST collection has improved, no doubt. In those areas, our profession has played very, very important role. In income tax, friends, the concept which government has come, no any other country is having that advanced system. The way government is moving ahead, even the appeals will be faceless, and we can all understand till few years back, all those persons who are working with income tax department, their official hours used to spend in income tax department only. But the way our government has taken steps, one side they have reduced tax rates, which is one of the lowest amongst all the countries. If you see the tax laws in USA, if you see the tax laws in all developed countries, Australia, they are having around 47 to 50% tax rates. But if you see in our country, and these all things have taken place just very recently. So the way things are changing very fast, and in those changing areas, we professionals can play a very big role. But one thing I would like to share that is very, very important and which is going to affect we all professionals, that is due to 5G technology. If you see the future after 2 years, things will be altogether very different. Believe it, friends. There was a circular last year in March and 2021 by MCA that if your client is a corporate assessee, you are supposed to give audit trail of his changes, whatever changes he has done in their accounting software. That circular has been postponed for 2 years, but believe it, friends, this type of circular are supposed to come and become a regular feature in our profession. So what will happen after 5G technology takes place in our country? Believe it, friends, our financial audits will become system audit. And we'll not be able to do those type of audits. It will be possible only and only if we'll use different softwares. Then only we will be able to compete with other professionals. Just few months back, there was a panel requirement by Indian Banking Association for forensic audit. And if anyone of you have seen the requirement in that panel for forensic audit, we chartered accountants were not capable of doing that audit, even not eligible to fulfill that form because they were asking what tools you are using, what method you have adopted, what tools now you are going to adopt. Believe it, friends, we are lucky that at our institute level, we have already earmarked 50 crore rupees and we are coming out with 4 softwares for our members. And those software will be very, very important, will be playing very important role. One of them is audit tool. Another one is office management. With office management tool, we are ready. Within a month, you will see, and we are going to provide all these tools free of cost to you, which are going to play a very, very big role in our profession. Not from that angle we are going ahead. Believe it, friends, this is the year after the incorporation of our institute. This is the first time that we are going to change even the total CA course, and it will be 100% in a model where our chartered accountant, when he will pass the exams, he will be a perfect professional for that area. Till few years back, we used to think that he's the most important person, the person who used to read and rewrite. Again, we used to think he's the most important person. But that concept has changed. All informations are with us. The requirement is that how, when, and where you use that information. That is the most important thing. Few days back, I was reading one of the article of professor of IIM Ahmedabad, lady professor. She has written very fantastic article that sometimes I'm afraid whether this artificial intelligence or data analytics will grab my job. Yes, friends, we have got only one option if we have to remain in our profession. We will have to understand and take a training that how we can use those artificial intelligence and data analytics in our profession. So, when we are coming out with 4 software for you people, most important thing, the most important challenge for you will be to understand that how to use those softwares. When we have implemented SSP portal in our institute, it took almost 3 years to inform, to teach our members that how to use it. Till date, members are very confused. Sir, what to do, what to not to do. But if you start doing it, we are trying to improve our systems so that our members should be equivalent to the other professionals of different organizations. Rajkumar ji was talking about labor laws. And believe is, till now, we professionals are doing 3 types of work: compliances, advisory, and litigation. After implementation of 5G technology, mind it, friends, all compliance work will be taken away by the government from us. You can see, from now you can see in GST turnover limit has improved. If you are filing income tax detail, the moment you put your PAN number, annual statement comes. So things are changing very fast. My request is, with different laws, please improve your capacity and capability to understand and start using these softwares also. That is very, very important. I will not take much of the time, and I'm very sure the way things are changing, our country with this government, we professionals are playing very important role and will continue to play important role with all our understanding and knowledge. Thank you. Thanks a lot.
Thank you so much, sir, for such an enlightening address. I would now be requesting CA Raj Chugh ji, who is the Vice Chairman of the Committee on Economic, Commercial Laws and Economic Advisory, to please deliver his address.
My council colleagues on the dais, friends from the one family of the professional accountants, one earth, whether it is India or the other part of the globe. The law has its own way to work for the different countries. And more particularly, the economic and the business laws keep on changing. Its shapes changes depending on the growth of the economy. We all live in a dynamic environment. Naturally, dynamicity and the speed with which we work and the government take control of every subject accordingly. And India being on a growth path, naturally looks it in a different manner to best of the practices. If we really understand how the place we built in the ease of doing business parameters, as the World Bank has reported with, in 2014, we were at a position of 142, and 2022 we have at the number of 63. Within a span of 8 years, we have really surpassed all the capabilities, all the parameters where we has been looked differently by the world. And now, naturally, with the passage of time, there are many laws which has been redundant within many provisions of the different law which has been felt like it is of no use, that has been made redundant, and that has been removed from the system of the for the best of the governance system for the country. You see, like parameters which we speak about, the one family and at the same time one future also. Whole of the world in the time to come is going to be one. The decriminalization of the law, which has been taken by the government by way of the bringing out so many changes which has already been done, which is on the pipeline, whether related with the economic law, business law, taxation law. And you see like how the changes are being taken place. There is an act which is being brought into the system of the working, and then it is a rule-based system nowadays. And not limiting to the rule-based, but there is some kind of regulator also supplementing and the supporting to carry out the objectivity of the law. The chartered accountant, or more particularly the professional accountant, in all the three levels, whether in the development of the law, because they remains as a consultant, or they remains in the system to bring out any economic or the economic business law or the tax law related. Government always through the institution like ICI always remains this institution in the forefront for the development of the economic and commercial law. And in the administration also, the professional fraternity remains as in the forefront, and naturally in the interpretation side also wherever need be, so through the mechanism we also remains in the forefront. So you see, like from the origination of the law till its interpretation, we are there, so we have to understand in the best of the manner. Now the government, through the movement of bringing out decriminalization or decriminalize the parameters where some stress is there in the minds of the business community or the community who was contributing for the growth of the economy. Now that has lately been thought of by the government. Now the process has already been started. In many ways, either the redundant has been removed, or the provisions which are not building good for the country has been in the time to come. That process has already been started with Companies Act, LLP Act, so many removal is there. Then we talk about the Pharmacy Act, then Post Office Act, Copyright Act also, the DICGC, the Guarantee Commissions also, the Factory Act also. So many law which is in the forefront for the development of the economy of the country, whether it is the industrial side or whether it is the service side or whether it is for the farmers front on the agriculture side also. So recent amendments has taken place in many of the laws like IPR also, competition law, one of my friend has already spoken with, FEMA also. You see, like the government is being empowered through the mechanism of the law to come out with the different policies also for the development of the economy. Same is very newly a national policy on the logistic, which if we really understand as a professional, for ease of doing business, for bringing out something good for the nation, that is the step by which really we will be taking forward the economy to a different level. Reduction in the, because you know we all are living in a competitive environment. Wherever you reduce the cost or reduce the manufacturing price of your product, you becomes a gainer. So these kind of policies are also equivalent to the law which is supplementing to the main framework of the economic system. Same is with the foreign trade policy also. Nowadays, policy like free trade agreements is in the forefront. We cannot remain in isolation. We are not in a country. We are a part of some globe. So unless until we take care of and handhold with the other countries, our country cannot grow with. No country can grow with. No nation can grow with. With those kind of understanding, India has becoming at the forefront and bringing out so many good things for the globe also. And now the time has gone when we used to see like it's a slow process. In the digital era, number of law which is related with the digitalization, whether it is the privacy of the data, whether it is the information given to the every society, every members of the society. So these are also the different law which gives a direction towards the better future. And we as a future, one future for the globe, we all have to stand with the changing time. And I personally feel like it's not the court of law. There's some time of the, under the economic and the commercial system, mediation will also play a bigger role. And the government has taken a step towards that only. Mediation will be in the time to come, mediation and conciliation in the time to come, with the greater opportunity for our professionals also. As rightly been some of my predecessor on the IBC also, IBC forefront, exit has been made easy. Though entry is quite easy, but sometimes India was used to be little ineffective in bringing out the exit route. Now, through the IBC process, this has been made easy. And let me, in the end, we must feel like the professional accountant from the globe has to be instrumental at all the three levels. Once the law is there to bring out in the system, or during the process of the implementation, or in the interpretation, filling also, interpretation system also, because we are well equipped to understand from the different practical perspective. And I'm really very grateful and thankful to each one of you also for, I can find some of the participants from the other part of the country also, other part of the globe, where they may be having a different law, some local law, and there are the certain which goes common. Because the business law are mostly common. If we talk about the taxation side, if we talk about the Corporate Act, Companies Act, or the Common Act which really takes place in the common, and brainstorming on this economic and the commercial law is the necessity to develop a one family and the one future with the one earth. That is the need of the hour. And I really appreciate this subject has been drawn attention of the World Congress of the Accountants also. Thank you very much. Thank you.
Thank you so much, sir, for your address. Moving forward to our final panelist for this session, I would now be inviting CA Priti Savla, Vice Chairperson of the Corporate Laws and Corporate Governance Committee. A great round of applause, please.
Good morning, everyone. Good morning. Very respected dais and council members senior most, our Sri Rajkumar Adukia ji, Sripriya Kumar ji, the Chairperson of Corporate Law, which I am the Vice Chair, Prakash Sharma ji, Hansraj bhai, other council colleagues who are there on the dais, Kemisha madam, Dheeraj bhai, I can say Piyush bhai, Prasanna ji, and I really acknowledge the presence of our honorable past president, CA Uttam Prakash Agarwal ji, and CA Shri K. Raghu ji, and my very wonderful audience. And I hope that everyone is enjoying this World Congress, which is first, and Pramod Kumar ji is also there, Chairman Accounting Standard Board, and I hope Abhay Chajet ji was also there. So hope everyone is enjoying this World Congress, which is happening first time in India in 118 years, and the grand ceremony and all the sessions, concurrent sessions are going well, and hope this session is also going well, and you are gaining the knowledge out of this. And being Vice Chair of the Corporate Law and Corporate Governance Committee, we are doing a lot of things along with Ministry of Corporate Affairs at Institute of Chartered Accountants of India, and serving the best to the members, and also having a lot of things which the ministry is coming up so that supporting the ministry also, and acting as a bridge between the laws, corporate laws, as well as for the benefit of members. Friends, the corporate law is very vast, and I thought I should pick one of the area in that which is very, very important in today's era, and that is all about sustainability. And the sustainability is a buzzword, and its evolution and how what at present is going for. And let's see. And even I am happy to share with all of you that this conference is also net zero carbon neutral. And what we have done is we have calculated the carbon emission to be done, and the carbon generation 7,090 tons of carbon generated, and we have ensured that 8,000 tons of carbon neutral is happening. And all we have calculated how much the carbon neutrality to be done, and all those things are being done also. And this is all about for our best future. So the reporting for this is all about ESG, that is environment, social, and governance, and how this has been evolved. So friends, if we see the slide, the reporting framework in the Indian scenario, how this it is all since 2009, the things have been evolved from where the voluntary guidelines on corporate social responsibility has been issued by Ministry of Corporate Affairs, and over a period of time, the earlier it was voluntary disclosures and the non-financial disclosures, how this environment, the people, social, and the governance has to be taken care of. And if we see very recently, from 1/4/2023, this BRSR, that is Business Responsibility and Sustainability Reporting, is becoming mandatory. And since we have seen it is mandatory for top 1,000 listed companies on the basis of their market cap. And we have seen that almost AGMs of all the companies, listed companies, are over. And we have seen that 180 companies have voluntarily followed this BRSR, even for this one from this 1/4/22 also. So the back testing of this selected companies from 180 companies will be done. And we are in continuously touch with SEBI, and SEBI has requested SRSB, that is Sustainability Board, to do this sample back testing, how this reporting has been done, and on what basis this has to be developed further, so that best of the reports should come as a BRSR from 1/4/23. Friends, again, it is based on the goals. There are essential goals and leadership goals, and leadership goals are still not mandatory at present. It is voluntarily to be followed, and based on this reporting requirement, we have also developed the We have also developed the SRMM, that is Sustainability Reporting Maturity Model version 2. So on that, because of that, if the companies are actually that ESG compliant and there are 300 marks given to them. If they are ESG compliant, then they will be 75% or more compliant. Then they will be leading by an example. And if they are at the formative stage, still undergoing that, then the various levels are being given, whether they are at formative stage, emerging stage, or established stage. So this is how the entire things have been developed as SRMM. Again, as a technical literature, we have published a lot of things so that the capacity of the members are built. We are also running a certificate course on BRSR, and 13 batches have been completed, and about 1,000 members have actually done this course. Again, the publications what have been there on the sustainability, technical literature, SRMM, the capacity building. We are doing a lot of programs on sustainability. All are virtual. You can take benefit of this. And again, this social development goals which have been there, those are developed based on that, how to actually implement on the basis of GRI, UN, CTAD, the comparison of that, and how India is following it up. All those technical literatures and webinars are there. We are also organizing this reporting awards, so best reports, sustainability heads, and the reporting members awards are there. Again, we have ESG roundtables, disrupting the boardroom. We have organized in various metro cities so that the members can take benefit to whom it is applicable. And one more thing, I will brief you about the social stock exchange, which is very in July 2000. Recently in July 2022, the SEBI has come up with the circular notification for social stock exchange, and this is a very new concept in India. In 2019 budget, Honorable Finance Minister has announced this concept of social stock exchange, and which is getting implemented now. Here, the NGOs, a non-profit organization, will be listed on the stock exchange that is called Social Stock Exchange, which is under Bombay Stock Exchange and National Stock Exchange. And the regulation and the rules and the regulations for listing of these NGOs have been already framed. The Social Stock Exchange entire committee has been identified. We are continuously in touch with SEBI, and along with them, the SEBI has, in the circular also, the name of the Institute of Chartered Accountants have been mentioned, and we have formed a Section 8 company that is called Institute of Social Auditors of India, and where the social audits of this, all these NGOs will be listed on this social stock exchange will happen, will be done by the members who are doing the course, which will be conducted by NISM. The exams will be conducted by NISM. We are supporting, even we have signed MOU in the last council meeting with NISM also to support them to develop the course and the question bank for the examination for the members who want to pursue as a social auditor. And once they are social auditor, they are qualifying the exam, they will become the social auditor, and they will be regulated by Institute of Social Auditors of India, which is 100% subsidiary of the Institute of Chartered Accountants of India. And friends, these NGOs will be eligible to issue the zero coupon, zero principal bond, which will be traded on this social stock exchange. So friends, this will bring the transparency in this NGO sector, because we don't know whether this amount of donation which is given by us, how it has been utilized. And with this framework, everything will be more transparent and utilized in a proper manner. And friends, this is a great opportunity for all of us to support the NGOs to be listed on the social stock exchange, to support, to do the audit, become the social auditor. Huge opportunity in this area. We are having a regular webinars in this area also. You can join those webinars, and if anything required, you can visit the website also and be in touch with any of us. Thank you very much for patient hearing. Thank you.
Thank you so much, ma'am, for your brilliant presentation. And now, as we conclude this technical session, I would like to extend a very hearty vote of thanks to our esteemed panelists. A great round of applause, please. We have on stage CA Dr. Rajkumar S. Adukia, CA Sripriya Kumar, CA Prakash Sharma ji, CA Raj Chugh ji, and CA Priti Savla. A great round of applause. And I thank you all for your valuable insights on this session of recent changes in corporate, economic, and commercial laws. I would also like to thank the past presidents and Central Council members who have joined us here, and to all the delegates and members. I thank you all for your presence and participation here in this session and for making it a resounding success. Thank you so much. In a few minutes, we would also be beginning with our next session here only. Thank you so much.